The national housing markets continue to rise, with house prices up once again in the month of October. That's the 9th consecutive month now. If you're a regular subscriber to our weekly Property Insider chats or a subscriber to my podcast, you'd know that earlier this year, Dr. Andrew Wilson forecast the housing markets would change direction, house prices would rise, and that was at the time when many were still forecasting property Armageddon. Well, we're at the tail end of the spring selling season, and today Dr. Andrew Wilson is going to share his latest housing market report. If you want to keep up to date with what's happening to our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated each time a new show comes out. We're now 10 months into the year, and it's unlikely that at the beginning of this year, many would have believed the resilience of our housing markets. Our housing markets clearly reset at the beginning of the year, and house prices have now risen for 9 months in a row, despite all those interest rate rises earlier in the year, and despite high inflation, reduced borrowing capacity, and the media keen to warn us that our housing markets would crash. Now, looking back, we've witnessed a year that's seen Australia's markets dance to its own tune. It drowned out all the noise of the skeptics, and it sent the property bears back into their caves to hibernate. You know, all those commentators who try to scare us about mortgage stress, a fixed rate mortgage cliff, rising unemployment. They even talked about a recession earlier this year, didn't they? Yet despite all the challenges thrown at them, property values in our combined capital cities have kept rising. So I'm keen to hear the latest housing market statistics for the end of October from their chief economist, Dr. Andrew Wilson. Hi, Andrew.
Yes, good day, Michael. And we've got some positive results again. No surprise that national house prices have increased for the 9th consecutive quarter. And I guess it really does put into perspective those negative sentiments that you described in regard to earlier forecasts of the prospects of the housing market this year. It's really made a lot of people look pretty foolish. But 9 consecutive quarters now in a row. These are rolling quarters, Michael. And the October quarter, actually, we saw prices growth accelerating. The previous month maybe started to show that we were peaking in the cycle, affordability issues perhaps starting to tax buyers. But now the market's back up and running again in strength. In fact, the second strongest increase for the year so far, just behind the strong June result that we had, which was so far anyway, the peak of the market to date over 2023. Look, maybe some seasonal impacts. We're now got 2 of the spring months included in this data, September and October, with just the August month reflecting winter. The previous September quarter, of course, had 2 winter months in its measure. So perhaps those seasonal impacts, we do know that higher priced properties do come into the market through spring. And that, of course, does have some impact on price measurement. But nonetheless, the trend is clear, Michael. Prices are continuing to rise. We also had a strong result for units over the October quarter as well, Michael. After a flat result over the September quarter, the October quarter for units picked up at nearly the same level as houses. So really no need for negativity or pessimism with the latest data for our housing markets.
Well, in fact, Andrew, the house price figures that you've provided us show that they're now higher than the previous peak recorded in April 2022 before interest rates started to rise.
Yeah, national house prices have now reached a new record level over the October quarter. And that reflects that most of the major capitals now are at peak prices, at record level prices. Brisbane is 1.2% higher than its previous peak. Adelaide 2% higher, and Perth 2.3% higher. Melbourne and Sydney are still just a little bit under the mark. Sydney just 1.3% lower than its previous peak. And Melbourne, has been an underperformer this year, perhaps a surprising underperformer, the Melbourne market, still down by 3.4%. But really for buyers, that represents still good value opportunities in the Melbourne market, where at the aggregate level, properties are still being offered at a discount compared to their previous peaks, or the previous peak of the market, which was over the March quarter last year. But looking at the monthly data, Michael, Sydney up 0.9%, strong result there for Sydney, which was the same as what the national result was. Of course, it is a national weighted average measure that we use, so the bigger markets obviously contribute to that national result. Sydney up 0.9%. Sydney now, Michael, up by 9.5% over the year to date. So Sydney well and truly on track for a 10% increase in house prices this year. We've got to remember that Sydney prices fell by around about 8%, just over 8% last year. So most of what was lost last year looks to be regathered and moving beyond those previous peaks by the end of the year. Certainly that's in prospect. Over the full year, Sydney up 8%. Strongest results we're continuing to see are from the Perth market. Perth was up 2.3% over the month. Very strong result. And so far this year, the Perth house prices have increased by 11.1% compared to the December quarter result, and up by 12.12% over the full year, the full 12 months, Michael. So some very strong results there from the major capitals. I guess it's a spring fever. Spring has sprung. We're starting to see the typically more robust results that we get, notwithstanding the situation of the cycle at this time of the year. I guess the nonconformists to strong results over the month were Hobart, where even though prices increased by 0.8%, which is a bit of a bounce back on recent results, so far this year, Hobart's still down by 5.5%. And over the full year down by 6.2%. Darwin, which can be volatile, of course, a smaller market, and there are some significant seasonal impacts that do reflect the wet and dry season in Darwin that can impact that market from period to period. Prices down 2.2% over the month. So far this year, the same outcome, down by 2.2%, but Darwin house prices are still up by 2.5% over the full year. But Hobart, Darwin and Canberra, the smaller markets, are still tracking well below their previous peaks. But look, generally a good result there over the October quarter. The impact of the spring selling season on prices growth. This is the strongest result since the June quarter, which to this point of time has been the strongest quarter for 2023.
Well, clearly the supply-demand equation, it means that despite high interest rates, affordability issues, and all the negative media, there's more buyers out there than there are good properties for sale, and that's pushing up the value of houses. What about apartments? What about the unit market, Andrew?
Well, it was a strong month for apartments, Michael. We saw the national unit price up by 1%. So it actually outperformed houses over the month on the national basis. Sydney units up 1.2%. Melbourne units also up 1.2% over the month. So it was a bounce back compared to the previous month where we saw a flat result, which did interrupt 7 consecutive increases in the unit market. But certainly unit prices have made up for that in spades over the October quarter. And again, strongest increase since the April result, which was the strongest increase in the series this year so far on a quarterly basis when we compare that month-to-month quarterly results. But year so far, Sydney units up by 6%, national units up by 5.4%, Melbourne units up 2.1%, Brisbane units up 9.2%, and Adelaide, very smaller unit market in Adelaide, but so far this year, unit prices in Adelaide have increased by 12.6%, and the annual results are strong for those two markets also. Brisbane up 11.2% over the past year, apartment prices, and Adelaide up 12.2%. Sydney and Melbourne are certainly tracking lower than houses in terms of their results over the full year and this year to date. But we've got to remember, Michael, that it's a little bit of catch up from houses because houses in Sydney and Melbourne did underperform compared to units last year. So it's interesting that it's a period of, I guess, equalisation compared to last year.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process. It's not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Well, there's only a couple of months left in the selling season for this year. In fact, less than 2 months before Christmas. there's an interest rate hike likely coming up, and there's more stock on the market. What are your thoughts for the last couple of months of this year?
Well, 5 real weekends left till the wind down, till the finish of the year, Michael. Typically, we see more stock coming into the market, as you mentioned, as the year ends. And that means with our auction markets, lower clearance rates. Of course, last weekend, we had the Super Saturday, the pre-Melbourne Cup Super Saturday, where we do get a bringing forward of supply to avoid all the distractions of Cup weekend coming up next weekend. And we saw some big numbers of auctions, particularly in Melbourne, which had its highest number of auctions in over a year, 1,400 auctions there. Probably no surprise that Melbourne market did track backwards on the weekend, Michael, into the mid-60s. It's been a little bit sideways, the Melbourne market recently, pushing around about the 70% mark. So as I said, a lot more choices for buyers and a very, very big number of auctions in Melbourne. So yeah, clearance rates just track back slightly there. And also bigger numbers influence the Canberra and Brisbane markets on the weekend. But Sydney still remains strong. Biggest number of auctions for the year so far in Sydney, nearly 900 auctions, and actually a higher clearance rate than they reported the weekend before. Sydney continues to track in the mid-70s, and that clearly reflects generally a seller's market. But next weekend, of course, we'll have a break, for there'll be certainly significantly fewer properties offered under the hammer. That leaves us then 5 weekends till the final weekend of the year. So it's a bit of the get out of jail stakes for some sellers who want to obviously conduct or conclude their transactions by the end of the year. And as I said, with higher stock numbers and also a bit more motivation from sellers, we tend to get a little bit of a weaker result in terms of clearance rates. But clearance rates still, I suggest, would continue to favour sellers, and reflecting what we've seen with those price results. But so far, certainly the Sydney market is continuing to stand tall. The question is, Michael, as you originally proposed there, is what happens if we get an interest rate increase to the market? Now, that will be interesting, whether obviously we'll get the usual blather of negativity with another rate rise, remembering that we've had 5 pauses over the last 6 months. So really, we've probably come to, you could probably describe it, we've had the peak of the recent rising cycle, that's peaked. And if we do get another interest rate increase, then it will be the beginning of the next increase cycle. Now, I think that's an indictment on the Reserve Bank, and I think it shows that their wait-and-see approach has failed. If they do raise rates, it indicates that they perhaps should have continued to raise rates when they were pausing rates. We've got some other issues that reflect that. Australia's official rates are 1% lower than the US, and yet our inflation rate, which unfortunately is now rising again, is well and truly nearly 2% higher than the US result. So we have a lower interest rates but higher inflation than the US. So it sort of doesn't add up. Not that we can really compare like with like, but I think it's just another indication that the Reserve Bank perhaps has gone into pause mode a little bit too early. And I'm sure there'll unfortunately be more criticism of their policy outcomes if they do move into higher rates again, although they've consistently said that there was a chance that rates would rise again if inflation raised its ugly head, and it has certainly raised its ugly head. We've had 2 consecutive months of increases in inflation now, Michael. Underlying inflation, of course, which is the key target for the Reserve Bank, is stuck at around 5%. And of course, the target is 2 to 3%. So we're tracking at double the target. And the Reserve Bank is not mentioning, or certainly didn't mention in its previous minutes, the target to where they think that underlying inflation will be met. And they've consistently said that would be the end of 2025. They didn't mention that, so perhaps they're getting a little wary of making forecasts, because let's face it, Reserve Bank forecasts have been very questionable over the last few years. So will we see an increase in interest rates on the Melbourne Cup traditional increase day? Perhaps we can discuss that in more depth next week.
Well, the Reserve Bank's got all the information it's going to get now with employment figures, inflation figures. So look forward to catching up with our chat next week, just before Cup Day, to get your thoughts on what the Reserve Bank's going to do. But putting it all together, it's another great month, the month of October, for our housing markets.
Yes, again, resilient and robust. They're the 2 R's that consistently reflect housing market activity over the medium to longer term in Australia. Capital city housing market activity. Some more good results in prices over the October quarter, and some pretty reasonable results as well on Super Saturday.
Fantastic. Catch up with you next week, Andrew.
Thank you, Michael.